So good morning, everyone, and thanks for joining me in the second session of the day. My name is Ali Shafi. I'm offering in the listing department director in QFMA, and I am pleased to moderate this session with the distinguished panelists. From far end, we have Maha Saadi. She is from QFC. She is the yeah, but I have to zoom it in. Regulatory Affairs Director. We have Carmine Di Noia. He's Director for Financial Enterprise Affairs from OECD, which is international body. And we have Dr. Farid. He's a chairman of Egypt Financial Regulatory Authority. Thank you and welcome. So I will start with you, Dr. Farid, regarding the session title is about the SMEs and small businesses. So I would like to start with the statistics from the US. 44% of the GDP of the US is created by the small businesses. So almost half of the US GDP is created by SMEs. So this vitality of this sector, do you think it's considered in the rulemaking process for the regulator? Do they consider the importance of this, actually not a small business in terms of their effect of the economy? Like half of the economy is created by this sector. So what do you think? This is considered in the capital market regulation, or no, we are focusing only in the large corporates and which is more like blue chips companies?
Well, thank you for the introduction. I would like to thank again QFMA and Dr. Tami for the invite and for arranging the IOSCO annual meetings and for this conference. I usually like to speak last, but you made the pressure on me now, so we will try to be as honest as possible. I believe capital market regulators got it wrong when it comes to SMEs. We need to, first of all, try to identify what's an SME that we do care about. Are they the entrepreneurial people which create very small companies, not considered as an SME yet, it's just a startup, and then it evolves and becomes a huge company and a conglomerate. So do you consider this an SME or not? That's a question to be answered. The second point, for traditional SMEs and not growing SMEs, I believe that their story and their success would not be based on equity story, because they are medium-sized companies or small-sized companies, and they will continue and are happy to be a small-sized or medium-sized company. So their answer, or the answer to their financial needs, does not come from equity. Because any equity investor is not only investing, or he doesn't invest unless there is an equity story behind this investment. He wants to see the company growing, acquiring other companies, so there has to be a story, a growth story. For SMEs, for most SMEs that you alluded to, and by the way, those figures that you mentioned in the US, most probably they are larger in Egypt, for example, or larger in some other markets that are quite regional. You will see that maybe 80% of incorporated companies are SMEs, for example, in Egypt, or around 75%, and the remaining could be considered between the M and the large. So basically, before trying to answer the question, we need to analyze, are we talking about entrepreneurial ideas and startups, or are we talking about SMEs? Because the solution for this is very different than this. And I'll try to give some ideas of what we have been trying to do in the Egyptian context, and as well at the IOSCO level, trying to push for some ideas that might be helping markets to grow. So for SMEs, their story is a debt story. It's not an equity story. So we need to come up with ideas and methodologies and remove any bottleneck that hinders the process for SMEs to issue bonds. And then will come the usual suspect and question. But to be able to issue bonds, you need scale. And hence, this is the problem. You need to check and resolve issues and problems associated with scale issuances and try to make it on a small scale and a medium-sized scale for different types of funds, and reducing the cost as well for rating agencies, because you would want those bonds to be rated. So how to reduce the cost of rating, that is one of the things that we need to be working with rating agencies and explaining to them the idea of the importance of reducing the cost for small and medium enterprises for the small issuance. So that's number one. Number two, we need to create, and we have put some examples of it, regulatory frameworks that would enable for debt funds, which we name it in some other instances private finance, or pure mutual funds that focus on those type of bonds for the SMEs, and hence this fund would be acting as an aggregator for the different bonds that are being issued. This is the story for SMEs. For entrepreneurs and startups, it's a very different story. This is an equity story. Of course, regulations pertinent to venture debt is very important, but it's not the key. You need to have risk capital that is accepting to participate with those companies and take the risk. 1 out of 10 would succeed and the remaining 9 would fail. This is one of the key differentiating points between the US markets and the European markets, by the way. So US markets, they can accept easily, and the risk capital over there, that they can put money in 20 companies, the fund can put money in 20 companies, 1 or 2 only to succeed the success that we dream of, which is the unicorn establishment. However, the rest, if they fail, they're fine. They know that this is part of the business. In Europe and other markets, including as well could be our area, we're still a bit eerie about this point. So how we were trying to tackle this point for limited partners to be participating is to create listed vehicles for venture capital. So venture capital funds to be listed in the market, and hence we will be creating liquidity for the limited partner. Given the high inflationary environment in our countries, and in my country in specific, we needed to have a vehicle that would allow limited partners to exit whenever they want. Because whenever you tell an investor in a high inflationary environment country, you need to lock in your money for 10 years or 7 years because of the maturity of the fund, they would tell you that that's too much. We have high interest rates, high inflation, and hence we would rather invest in fixed income securities issued by the government, anything that is short term. The moment you tell him you need to look at an investment horizon that is beyond 1 or 2 years, okay, they shy away. Hence, creating vehicles that are listed. And by the way, we relied in one of the regulations that we have put, we relied on the EBRD. They have done a study comparing the performance of listed VEs and PEs, listed venture capital funds and listed private equity funds, comparing them to unlisted ones. And they found that systematically and persistently, the listed ones were outperforming the unlisted ones because of transparency, disclosures, ease of entry and exit, and this reduced what is called in finance liquidity premium on them, and so on and so forth. So this is the game. And then would come a third area, and I don't think for all regulators it is their domain of regulation, would be the non-bank financial institutions, which is lending entities. Maybe in Egypt, it's our case. We are a unified regulator apart from the banking, of course. It is with the Central Bank of Egypt and monetary policy. But apart from that, any financing company, we are the regulators. Insurance, we are the regulators. Capital markets, we are the... So basically anything that is non-bank at large is being regulated by the FRA. So we have a third line, and this is whereby you created a lot of traction. So I remember the microfinance law that was issued in Egypt, and again, the success in this area that I'm going to talk about is related to debt instruments. And I'm sorry if I'm taking too much time. Yeah, no, you want me to close?
It's fine, but we can follow up on the second question.
But let me give the figures here. Sure. Just 1 minute. The success was associated with lending instruments, so it is loans provided to the SMEs market and the micro market, and we reached to a point, the highest point, we reached to 4.9 million borrowers from around, I don't know, 44 microfinance company. So again, the debt component is the answer. Thank you.
Okay, Carmine Dinoya, please. As per Dr. Farid, he's he has a sectorial or sectoral segmentation of the SMEs. He doesn't see SMEs as one size fits all. There is some details. He differentiated between lifestyle companies like the shops we see in the street, like laundry or the supermarket, and there is entrepreneurial disruptor SMEs. And he's suggesting to tailor our regulation within these sectors based on their importance of the economic effect. Do you agree with this approach? And also, I want to take your view about the debt fund and venture capital ETF approach as a capital market access for the SMEs.
Thank you. No, actually, you were long, but absorbed all what I wanted to say, so you were very quick. No, we were quite efficient. No, I really agree, utterly agree with everything what you said, because basically we still consider a big pot of these SMEs where they are totally, different animals, so pears and apples, really. By the way, I see also from the experience of my own country. Now, overall, just the order of magnitude, more or less, we have 40,000 listed companies around the world, excluding ETF and funds. 1/3 is, I would say, SME, so those that are traded, listed, and depending on the legal definition, on this second-tier market with some simplified approach. And, but in terms of market cap, this is more or less 5%. Okay, so obviously because they're much smaller. By the way, 100 trillion, which is 120 market cap, equity market cap, is actually more or less the same size on the back of the envelope, 100 trillion of bonds in the world. 65 actually sovereign, and 35 we have been discussing at IOSCO in these days is corporate bonds. I really, I agree that typically we discuss a lot about equity, okay, but I think especially for the SMEs, those that also they want to grow, not all of them. They may, some of them, some family firms, they have their own niche. They don't want, they don't like, they fear to open the capital. Opening the capital means we can discuss maybe later or corporate governance. But so they may, in the traditional funding escalator, bonds, corporate bonds are increasingly have an importance. And I would say for all range of issuers, the big one, maybe they have already the equity, and the small one. Some experiences, I think something was mentioned also in the previous panel. Again, I give you ours, which is often quoted, but then we use at the OECD level, and there is good empirical evidence and analysis by serious papers, is on mini bonds. Mini bonds, you issue a bond of $1 million. I mean, it's a bank loan, it's not a bond, no? There is no liquidity by definition, cannot be a second amount. But actually, it has a great signaling effect, signaling that then also some regulatory implications, depending on the geographical area. If you issue a mini bond, even on a specific segment open only to professional investors, then you have to some ad hoc disclosure, price sensitive. So you have a signaling, you're more transparent. And a good paper of ECB, for example, on this, on the Italian experience, is that after issuing a mini bond, then what happens? It may happen that you go back even to the traditional bank loan, which you hadn't because you were credit ration, or you had at a very high rate. And, or exactly, with much better terms. And, or, this is not complementary, everything can happen. Then you may be, for example, we had that you can be more easily the target of SPACs, or special purpose acquisition company. You may then issue, maybe after some time, equity, maybe on your segment, and even later, maybe go on the main market. Or actually, simply go in the private equity domain, because these are traditional, again, funding escalator, friends and family, some, crowdfunding, then maybe private equity, and the listing after that has completely changed. The amount of liquidity which is around is totally, it's an order of magnitude we didn't know. But, and this is again, I really agree with you, then this is especially for, the growth company, those that need to grow, and little by little, they build a story. Otherwise, it's a totally different thing. And that's why, so we should also be careful. Everyone, we're always saying, okay, we need a simplification, that's good, obviously. But again, we need to be careful, and maybe I close. Also, going on the market is not an end in itself. Otherwise, we really risk, adverse selection and only the worst to go on the market. You need a story, you need, willingness then to be open. And again, bond is really, I think, the good way to do it. So also for your market, I understand, is an interesting exchange, basically with no bond, listed, okay? But I think it's something that should be considered by companies as sort of acclimatation to the market. And maybe I stop here. But.
Okay, so you almost agree with Dr. Farid because you are still in the debt market. We are talking about mini bonds or debt market. Usually investors prefer these kind of instruments where the, in terms, when the default scheme, the liquidation is going to the lenders before the equity holders. How would you like to build on that?
I would agree. I think from a regulatory perspective, these frameworks have to be proportionate and they have to be scalable. So in general, I would say I would agree with the premise made that it is not a one-size-fits-all kind of approach. Different SMEs have different needs, have different growth potentials. And I believe that we have taken that into consideration within Qatar Financial Center. So Qatar Financial Center differentiates between what we call regulated and non-regulated activities. And if you would see the prospects that we had over the past year, so only in 2024, we have seen a registration number of over 800 firms, out of which I would say the majority, 827 out of 836, were mainly non-regulated firms or which would fall under the SME category. And to be very proportionate in our approach, we provided different structures so they can come up as a limited liability company, but we also provided them with investment club opportunities where up to 15 individuals can start fundraising within a small group. But then we also have started promoting our collective investment scheme for proper fund issuances through professional investors. So I believe, yes, it should be proportionate. It should address the needs of the different SMEs. And if I'm not mistaken, this is the backbone also of the Qatari economy, where over 97% of the companies that we have would fall under the category of SMEs in general. Another thing that I would really like to take that into the broader perspective is the excellent vision that Qatar had for the National 2030 strategy, where, again, SMEs were put part and center of the growth to diversify. And different options were provided. One of them was equity, but also looking into the debt market, because you have to have choices and options for SMEs to scale and grow.
Okay, Dr. Farid, we want to go to the equity side of the story, because we are, as a capital market regulator, we have some tools. We have something called exempt offers, private placement. There are new platforms like crowdfunding, which is under drafting these days. Do you think these options are viable for the investors, or no? We had a lot of stories where the regulator make a regulation, but nobody follow it or nobody use it. So it's like no added value. So what do you think at this point?
That's a very good question, to be honest. First of all, crowdfunding came before the regulatory frameworks for crowdfunding. So it was a market disruption in the financial markets field at large, whereby a disruption in the financial markets field, whereby market participants have seen that relying on or seeing that the regulatory frameworks and the bias towards large corporations is quite very obvious, and hence they opted for financing themselves through crowdfunding platforms. And hence, when we get to say that different regulators in different jurisdictions are doing or developing or drafting a crowdfunding regulatory framework, it is already existing in the markets. So it is already being used by different market participants to obtain funding, either for debt components, because this is a replacement for the mini bonds, by the way. What Carmine was talking about is mini bonds, having crowdfunding platforms for debt instruments, or for direct debt funding for corporations is basically a mini bond and a replacement for the bonds market. So if you issue the regulatory framework, you're complementing. And this would apply also for the equity component. But the equity component is being looked at for growth companies and not SMEs with stagnant performance. When you get to look at startup companies and how they are being valued, even when you look at the venture capital valuation methodology, the VC method for startup companies, it's all about the growth in revenues, the growth, the traction that is being created, and so on. These are the entities that would really need equity funding, but it would not be crowdfunding. Crowdfunding and angel investing most probably would be for ideas that haven't yet seen the light in that regard. Maybe what you're talking about if you want to combine traditional capital market activities with crowdfunding would be creating platforms for underwriting and investment banking. So that is a mix that is yet to be tested, how crowdfunding platform can be used as the platforms for complete underwriting of large corporates. And here would be the democratization of capital and democratization of capital markets. One of the biggest problems in capital markets would be the lack of democratization. You would want the largest number of people to be participating on a regular incremental basis until you create the middle income class that we are talking about. This is how you create the middle income class. Everyone should be participating, and that's why you will get to see the participation of families in the US, whether this exposure is direct exposure or through private pension funds, is more than 56% of those people living in the US have some exposure to equity market, because this is what creates wealth in the medium term. This is what creates wealth in the medium term. And hence, if this wealth creation is being confined in 10 people, then okay, those 10 people would be wealthier in the long term. If this wealth creation you manage through underwriting processes and crowdfunding, and to be diversified crowdfunding, of course, because of the risk of having one investment in one company and assuming that this would be your secret sauce recipe or the recipe for your secret sauce to become rich. Of course, it might work one time, but for 20 times is going to fail. So yes, crowdfunding platforms should be helping, and I believe they are already 100% existing, and not only for equity. You will find it for equity, you will find it for real estate, which is called real crowd or real estate crowdfunding. It is available now, even for paintings that are and jewelry. You can be creating crowdfunding platforms for them, and this is risky. So we need to put an effort as capital markets regulator and the market participants, because definitely the regulators cannot be responsible for anything. Marketing, developing standards, and monitoring markets, it's quite complex. So there has to be some strong entities working with regulators to develop those markets and to promote crowdfunding platforms after the regulation is being out, making sure at least that the minimum level of information is available and disclosed on those platforms. And hence, one of the clear dimensions that we need to agree upon, and that would be the last thing I say in this area, we need to decide as jurisdictions and regulators, do we want to be disclosure-based regulatory frameworks, or basically we intervene and prevent and consider ourselves managing with the underlying, because you can easily get tracked, okay, and dragged to become, okay, no, that's too risky, and you to be deciding on acceptance or disacceptance of platforms and so on and so forth. So this is one area we need to, and by the way, we followed suit advanced markets, and probably advanced markets are returning back to become disclosure-based regulatory frameworks rather than putting frameworks and implementing them themselves against companies. Thank you.
Just follow up, Dr. Farid. Egypt, is it merit-based or disclosure-based markets? Based on the law of the...
I don't know what to tell you, to be honest, but on paper we should be disclosure-based, but sometimes we get to feel that there are aspects that needs more intervention from our side. Of course, part of it could be the pressure of the public markets and, trying to intervene. And you all, and probably all regulators here have the same issue. regulators are always wrong when you think about it. It's either they're late in protecting markets, or they're too lenient or too stringent. I mean, there will always be something, regulators to be blamed on whether being excessively lenient and markets are growing. So when the collapse happens, or when a problem happens, where have you been as a regulator? Or you're becoming, okay, too risk averse, and hence you're holding back market growth and innovation and all of these aspects. You try to take a balanced approach, and something bad happens either side, then again you will be blamed. So we need to be accepting it's a loaner's job, let's put it that way. I believe Julia said it yesterday in one of the IOSCO meetings. It is indeed a loaner's job. So it is not easy, of course, to be the entity that puts people, you know, to prosecution and so on and so forth. But on paper, we are disclosure-based. Sometimes we get to act as being merit-based.
Carmine, if you can add to this subject regarding the tools for the equity tools for the investors and the SMEs, I can add something which is called mini IPO. This is a new thing in the US. They make a streamlined process for the IPO market. It's less disclosure, less cost. Even the financial statements of the SMEs could be non-GAAP audited. So do you think these tools could be viable here in the region or in Europe?
First of all, I think there is no silver bullet. So it's not that with that you solve the issue with another. So it's a series of a lot of intervention coordinated with a strategy. With, I think, markets are made by demand and supply. So on all sides, we're having disclosure. Sunlight, there was this famous lawyer, Luis Brandeis, was saying sunlight is the best of disinfectants. So we need transparency on the market, but I was a commissioner in the Italian Commission. We had prospectuses of 1,000 pages and 3 kilos. So too much sunlight can cause cancer. So you always need some sort of striking the right balance. And you need these coming from crowdfunding, coming IPO, my mini IPO. I mean, you need also that the other side, this must be an interesting story, an interesting proposition, interesting asset class. And I think you need, and I really like, again, Dr. Saleh, a very important point, we need also more and more participation of citizens, of taxpayers, of investors, direct and indirect, to financial markets, not only equity, but again, also bond. I like bonds. My name is Bond. I really like companies issuing bond. And I think it's a great asset class for investors, but with proportional, knowledge, and on both sides. So you mentioned the mini IPO. Again, I think we often talk about, we discuss also with Dr. Tani, the financial literacy aspect. We need the literacy also on the SME side. So we need to have an approach so that they can approach not listing, they can approach banks to ask for a loan, they can approach market, understanding what is transparency. Again, in Europe there is something like this. It's called the elite program, sort of price with a symbolic price, but then is an education program for companies. As far, depending, okay. And where also everyone participate, it was 1 year, now 3 years, but it's again, it's not for necessarily the listing, again, if it's seen as an end in itself, it's not good, but it's to participate. And also the other side, because for this democratization, for having a demand to go on the market, you need also proportional knowledge. Now, for the mini IPO or for the crowdfunding, I think we need also to be careful. One size does not fit all, but also, again, I was a regulator like you, but I would say not one size, but fit for all. So we need a basic level of transparency, of investor protection, and maybe proportionate approach. I have to say that in some cases, for example, for SMEs, we see now as OECD, as evidence on the market, maybe the primary, not the secondary, but the primary market for these small issuance can be maybe limited only to some investors. The professional, the big one, no, because the big one, BlackRock, cannot enter a mini IPO of 5 million. But it could be, you call in the US accredited investors, qualified investors on demand, or others. There are intermediate categories of investors that, with appropriate knowledge, appropriate also record of transaction, can be fit for this kind of thing. Then again, this is useful, crowdfunding useful, there are many, but then in the end we need also especially for companies who want to grow, we need scale, and going on the market is good because market are there, financial, so bond and equity, are there exactly to finance, growth of big companies, but growth of the small companies, which is the big companies of tomorrow. But also markets are important because they're counter-cyclical. We have seen now during COVID, many of us, again, are regulators. During COVID, luckily markets were open. We issued 7 trillion bonds and equity on that. Yeah, sure. And the banks, obviously, this saved the world. But especially in a closed markets is the easier way for have democratization of finance. It's much easier for citizens to access market, again, bond and equity, not only, than maybe going through the private. And I stop here.
His question was, should we as regulators accept IPOs, mini IPOs, without audited financial statements, without having financial statements prepared with the IFRS or US GAAP or something like that? Should we accept something like that, given that it is a disclosure-based? Because they will be disclosing that we're not doing this according to IFRS or US GAAP.
If I can add my comment for this one, I think for a purely disclosure-based market, if you disclose this is non-GAAP audited, you already give the right information to the investor, so the investor can decide whether it's. So
we should be accepting this.
Yeah. I just want to shift a little bit the discussion regarding something called incubators and accelerators. I think QFC has some organization, they call themselves as incubators and accelerators. Can you tell us if these organizations has improve or support the SMEs in real life, and if you have some stories?
Absolutely. I would first maybe just go from a broader perspective and touch upon an excellent initiative that was launched last February 2024 during the Web Summit, where Qatar Investment Authority allocated 1 billion for a Funds of Funds program that is targeted towards VC investments. And on the back of that, we've seen a huge interest in the region, specifically in Qatar, where with the help of QIA, we managed to register more than 6 VCs. I would just name a few: B Capital, Utopia, Rasmal, which is homegrown in Qatar, Golden Gate, Builders VC, just to name a few. And they came up with the proposition to also bring their expertise in the portfolio companies to Qatar. And what Qatar Financial Center offered is, let's say, a streamlined, fast-track registration process while they meet the QFCRA's regulatory requirements. So we managed to cut down the timeline exponentially from, 6 to 9 months to 6 weeks, because we've done very, let's say, thorough due diligence with the help of QIA. But what we've also noticed is with that, we've created a huge ecosystem that would also provide additional services, be it from mentoring, be it from consultancy services, niche regulatory and legal services, a huge interest in the emerging technology space. My passion is blockchain, but also artificial intelligence. So I think with that, with the push from the state level, with the cooperation of different institutions in Qatar, the role of incubation has even grown further. I would also like to touch upon what Qatar Development Bank has done with the Qatar FinTech Hub initiative, where they provide mentorship opportunities, direct investments to QDB as well. So maybe a success story would be seen as the amount of firms that we have registered as fintech service providers. We have also recently launched our digital asset framework last September, and we're trying to target some of these issues. What if we have tokenized securities? Could we look into some sort of facilitation of issuances of a tokenized bond that could be easily accessible? We're also working very closely with our colleagues in Qatar Central Bank, who have provided an excellent sandbox initiative, which addresses one of many things, including crowdfunding. So we've seen a huge inflow of fintechs and startups in this particular part. Another way to incentivize them was to reduce our registration fees because we know that they're in bootstrapping mode. So we've reduced our registration fees from 5,000 to 500. During the Web Summit, we also provided additional incentives with our colleagues with Invest Qatar, where firms that were screened and the due diligence was provided and their business case was validated, were able to register in Qatar Financial Center with no registration fees, no annual fees, and with tax incentives as well. So from our side, we see the interest. We're trying to provide assistance as much as possible. And what I'd like to also just highlight very briefly is the impact that we're doing is not only affecting Qatar, but it's affecting the overall region because it's also attracting a lot of talent and new businesses.
Dr. Farid, regarding the definition of the accredited or qualified investors, do you think the definition of this important term will affect the accessibility of the SMEs to the capital markets? I mean, if you expand the definition or narrow it, will affect for sure. But how do you think about this one?
I don't know why do I take all the tough questions, but anyways, okay. So it is a tough question because definitely it affects. So the traditional approach in identifying or defining what is called a qualified investor, one, it depends on the number of years of experience and the areas of experience. Two, it would depend on the amount of funding or the finances it is available for them, or they can their experience with it basically across the number of years. But if we're talking about crowdfunding, and if we're talking about I would say embracing more people to platforms that are not exchange platforms, so it's not a publicly traded company, we definitely as regulators will have to think of new approaches and methodologies to address the definition. So among which could be, instead of having it as defined as a qualified investor, to be an educated investor. And hence the platforms of crowdfunding and the likes will need to have training programs, initially onboarding exams. So when you pass these exams and pass these courses, you will be labeled as an educated investor and hence should be accepting or rejecting the amount of risks you get to see in the potential investment you're having. So yes, it affects. We need to think differently if we want to embrace crowdfunding platforms and the like, because those investors will be investing definitely in the different investment ideas and proposals that are being presented on those platforms, whether it's a real estate thing, whether it's an equity, fixed income. So yes, the simple answer for the question is yes. Qualified investors, you need to have different types of definitions and different thresholds if you want them still to be labeled as qualified, or you break it down between qualified and educated, and the platforms to have a financial literacy mandate in the initial onboarding phases of the investor to those platforms of crowdfunding that they need to pass with regular checks of different surveys and questions that they need to answer. Carmine was presenting 2 days ago the financial literacy study of PISA. So it showed that plenty of investors are not much aware with all the things that we get to assume are normal. So we get, of course, because the egocentricity, we get to assume that everyone knows everything about bonds, equities, funds, ETFs, but this is because we're working in this field and we believe everyone knows. No, not everyone knows, and hence the term of educated investors could be complementing the term of qualified investors for those crowdfunding platforms.
So you think about the financial literacy and education more than the financial ability. I mean, it's, okay. Do you agree with that, Carmine?
Again, there is not a single dimension, but I think first on the qualified educated investor, I agree with you. Typically, we think of qualified investors as a legal entity, but again, the topic, and it has been a decisive factor in the evolution of these SMEs growth markets, so typically exchange regulated is in some jurisdiction in Europe, they're called MTF, listing MTF, I would say, trading. And on the primary for these very small offers, having the access to these people has been very important, even if this is in regulations, for example, equal all over Europe, but the interpretation of supervisors of this regime has been quite different, which is a bit striking. Second thing, I think, okay, at the end, linked to that, so especially of physical person, I think this financial literacy aspect is essential. We don't want to transform everyone in a super finance genius. There are different, options, and then again, not everyone has to access market directly. A lot can access market indirectly through asset management. So the amount of knowledge is completely different. But I think, again, there is a flaw. That's why we have been discussing also with the authority and also here in Qatar, we think that it's good to have data to understand what are the policy that you should target, that you should use with kids. And so, thank you, Dr. Saleh, you mentioned PISA. PISA is this broad assessment that Qatar is already part of for students, is for math, science, and reading, but there is also this program specific on financial literacy. And we really hope that Qatar will join the program, because our kids are using apps of other countries, are using Amazon, using credit card. They're already in the market. We're not talking of people who will enter potentially financial market. They're buying crypto at 15 years old. And all the accessing the crowdfunding and the others can be very easily. So that's why it's important to understand where we are. What is interesting is that in the recent years we see that typically we thought that if you are a genius, a nerd, very good in math, then you're very good in understanding financial concepts. This is not necessarily true. So that's why it's important also to compare. Other countries in the region, like Saudi Arabia and United Arab Emirates, are already part of the exercise, and so we really encourage Qatar to be part of it.
Okay, I think we are almost done, but we can take one question from the audience. If there is anyone who has a question, or I prefer if someone has an SME entity, can share with us his experience. Okay, so thank you all. Please.
If there was time for a question, maybe there is a time for a final comment. I don't know, but you are the moderator. No, just one thing maybe on the markets, because, and again, this is given my role. It's important that, to adapt flexibility, proportionality, SMEs, 95% of companies more. So we need proximity is a value, regulators that do adapt. But at the same time, markets are more and more global and integrated, even the markets for SMEs. So just to tell you that it's important, also you are in a market also which is growing, developing, but also take into account, Dr. Saleh mentioned, there was this discussion on, now there is no time to go back on the accounting standard, but I think it's always also important to be global, so I would say always glocal, no? So global and local. So international standards, would it be corporate governance, sustainability, are there with flexibility, proportionality, phase-in, IOSCO approach with ISSB, so building block approach, everything. But it's important always to think in a global context, because funding is moving very rapidly, especially in this moment.
Please, you want to say?
I would like to ask the audience a question. If you know that we have other standards than IFRS, I'm not talking about US GAAP, other than the IFRS standards for the corporations at large, raise your hand. So I can see one raising here. So there are other accounting standards than the IFRS, labeled as IFRS, but for SMEs. This is my question. We don't know much, so here we have 3 or 4 that definitely know their fellow regulators. So basically, even the IFRS, they knew that they need to go proportional and to differentiate between SMEs and non-SMEs or large corporates. And hence, but most people don't know, including ourselves in some instances. You have a complete set of accounting standards issued by the IFRS specifically for SMEs, which made it lighter for them to follow IFRS standards, but not on every single disclosure item, and so on and so forth. So these are type of things that we need to be working on and helping each other, and maybe it doesn't have to be non-GAAP issued financial statements. It can be still an IFRS issued statements, but the IFRS for SMEs. Thank you.
Okay, so that brings our session to the end. Thank you very much. And you want to say something?
Actually, I just wanted to say that I would just agree with the notes that were made. I think we need to look into SMEs and the regulatory approaches in parallel. Regulation should not be seen as an obstacle for SMEs. So we have to look into where disclosure would be an issue. How can we automate it? How can we reduce costs? Because just disclosure for the sake of disclosure does not help SMEs. How would we be able to make sure that the information is transparent also for investors, depending on the different types of investors? And the concluding remark that I would have is that the SMEs would remain the backbone of the societies and different emerging economies. So we need to make sure that we're not just regulating for the sake of regulation. Again, regulation has to be proportionate, has to be transparent, and there has to be a comply or explain mechanism where if the firms and the SMEs are unable to comply, they should come up with solutions to go down the roadmap to be able to comply in the future. And as a concluding remark, I would like to just really congratulate Qatar Financial Market Authority for this amazing event, and thank you so much.
You're welcome. Thank you, Maha. Thank you, Carmine, and thank you, Dr. Farid. And thanks to the audience for joining us.